You are on the Transparent FX Academy. I'm Nick, and I'm a top potter on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. The pair that I want to speak about in today's video is EURUSD, the most traded pair in the market. Now, why do I want to speak about EURUSD? Because we have a quite interesting situation at the moment on it from a price action perspective, and this pair is quite near to providing to us a good trading opportunity. So as usual, I will give you guys the full breakdown and obviously provide as much education as possible to show you where we can be looking for the next potential opportunity on the pair. And as usual, first we will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective to see what hedge funds are doing in the market by checking the commitment of traders. And then by the end of the video, we will see where we have the highest probabilities for an opportunity on the pair. Now, starting here from the monthly time frame, what we can see now here on the monthly, we can see that at the moment we're testing a quite strong historical structure level for this market. In fact, this zone was acting as very strong resistance here. The market broke above the level, and at that point, previous resistance was turned support. The market tested and rejected its zone to the upside, and then the market melted back down. And currently, we can see how the market has just tested once again this very strong resistance zone and rejected also the level to the downside. We can also see how here, this is exactly the same zone that the market is currently testing. And since this level was previous resistance here, this is now again resistance here, and we can expect the market to provide a rejection to the downside, rejecting this historical supply and resistance area. Now, generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci on the impulse. And by taking our Fibonacci from the high to the low of this impulse, what we can see is that the 0.618 golden ratio has already been tested and the market started already to reject it to the downside. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see that the market has just created this W formation. Now, generally speaking, after the creation of a W, you do expect the market to provide a move to the downside to go and complete the pattern at the previous resistance, turn support. So here on the weekly time frame, we do expect this market to provide a move to the downside to complete the pattern at this previous resistance here, which is now turned support with a nice move to the downside. So both the monthly time frame and the weekly time frame at the moment seem quite bearish, and we can expect the market to provide a deeper correction after this impulse here on the weekly. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we see now here on the daily? I spoke about EURUSD after the creation of this M pattern here. I made a full breakdown explaining all the reasons for which we expected this market to create the move to the upside to complete the pattern itself at this previous support turn resistance. And in fact, we can see that that is exactly what the market is currently doing. And by the way, I will link this previous analysis in the description so you can go and check it out for further reference and more free education. However, by definition, the neckline of an M pattern is a resistance zone. So this means that we can expect the market from this resistance to get rejected to the downside, since on the monthly and weekly, we have already identified that we do expect the market to provide a move lower. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what the non-commercials in the market are doing, so the biggest speculators, what we can see is that with the last reports in the long term, we went from having 165k net positions all the way down to having 80k net positions. So on the euro, the net positioning is decreasing, with obviously shorts getting increased from an institutional perspective and longs getting decreased. The shorts got increased from 66k to 119k, and longs got decreased from 238k to 200k. So overall, we can expect EURUSD to potentially provide a move lower and complete this impulse correction and impulse pattern to the downside, rejecting this previous support turned resistance here, also on the daily time frame, and completing the weekly W formation. Now, how we will be approaching this potential shorting opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily time frames, those are the best time frames from a directional perspective. But when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. So inside of this area, what we will be doing with students is monitoring price action from a 4-hour perspective and lower waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And only if the market will shift from an intraday bullish to an intraday bearish market, only at that point we will be adding EURUSD to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside. If you enjoyed the video, make sure you smash that like button and comment below. Also, you can go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also get a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. And I will see you in my next breakdown.